Bitcoin's over. It's the boomer coin of crypto. It doesn't do anything. It doesn't have yield. It's not, it's not flashy enough. It's too expensive. It's not going to go up 100x like some of these other things, and it's just not a lottery ticket. And I get that, and that's what a lot of younger investors are looking for, lottery tickets. We've talked about this before, and it's not a lottery ticket. It's an escape valve from the system that is oppressing you every day with inflation. That it's a way to not get poor slowly.
James Lavish begins by dismantling the illusion that markets move on logic, revealing instead that Bitcoin is rising in a world driven purely by expectations, debt, and relentless money printing. And that changes everything investors think they know. Lavish begins by confronting the growing fear surrounding Bitcoin, arguing that while many call it dead or outdated, it may actually be the only real escape from a financial system quietly eroding wealth every single day.
Economic data is in a downturn, right? But people were worried about Fed raising rates, so the market rallies in the face of it. It's all expectations. All of it is expectations. And so much of that is baked into the market. That's why they say that the market's efficient. It's not really, but it's forward looking for sure, and so you just have to take every single day into account. And what's interesting today is that Trump put a new ultimatum out for Tuesday, and the futures are rallying here. Bitcoin's rallying, and it's kind of been doing its own thing a little bit. Gold is off a little bit. The yields are up. It's kind of like, I think the market it's beginning to shrug off Trump's, bombastic tweets about this. And I don't know if that continues. Depends on, the reaction from the Middle East and from Iran. But it's just interesting that the market is not really reacting the way it would have 2 weeks ago to that tweet, in my opinion.
My mind.
Well, the best thing to do is just not much. Just not much. Maybe have some cash and sit back, but don't do too much, because who knows what's going to happen next? You just don't know.
So Mike,
he's been likened to a loose cannon for his entire career, and that's his MO. That's how he negotiates, is the perception of being an absolute loose cannon. You don't know what he's going to do, and if it's a threat, it's probably not idle. That's why he had, that was the whole thing when he had this reality show. He's like, "You're fired," it's like, and then he'd fire people, and it's like, it's just that's the reality show that we're living in right now. And so the market is, I agree, it's becoming numb to it, meaning that people are like, hold on, just don't do anything. Let's see what actually, but give me some hard data on what actually happened.
Don't do anything.
I fully agree. I just think the number is nonsensical. It doesn't make sense. So,
right.
But that's fine. Here's the good news, is that there are Mike McGlones out there that really believe that. That means that they are not in the market, and they're going to wait, and and that's fine. And there are people who really truly do believe, and they're in my comments all the time, that Bitcoin's over. It's the boomer coin of crypto. It doesn't do anything. It doesn't have yield. It's not, it's not flashy enough. It's too expensive. It's not going to go up 100x like some of these other things, and it's just not a lottery ticket. And I get that, and that's what a lot of younger investors are looking for, lottery tickets. We've talked about this before, and it's not a lottery ticket. It's an escape valve from the system that is oppressing you every day with inflation. That it's a way to not get poor slowly.
Lavish believes the logical conclusion of this system is more money printing on a massive scale. If markets begin to fall significantly, policymakers will have no choice but to step in. The alternative, allowing a full-scale collapse, would lead to severe economic and social consequences. But this intervention comes at a cost. Increasing the money supply devalues currencies and drives up the price of assets. This is why Lavish sees assets like Bitcoin and gold as critical. They serve as hedges against currency debasement. In this framework, rising asset prices are not necessarily a sign of economic strength. They are often a reflection of monetary expansion.
So, but that's fine. You have a different opinion. Just want you to be, don't want you to be disingenuous about it. And that's why Dave is calling you out on it, is that $10,000 level is just, I mean, come on, we had every single thing happen in like you said, back in 2022, 2023. And, it never got below 16,000, or it touched maybe right there. And since that time, think about just the sheer amount, not just money printing, the sheer amount of, expansion of money supply and debt in the entire system. So if unless we have a collapse of all of that, and the liquidity, so you have to add the money and liquidity, and the debt together to get the liquidity. We're not going anywhere near 16,000 in this. And I don't know about gold, but I can't imagine that going down to 1,000. That might be like saying gold's going to be at what, 500. It just doesn't make sense. Now, you have a different philosophy, and you've made that extremely clear on here, that your philosophy is that Bitcoin is just one of thousands of options in the cryptocurrency space. And I hear you. I understand why you think that. You know that Bitcoin's different, but you believe that the perception of it, and please correct me if I'm wrong, but the perception of it doesn't matter. Is the only thing that matters, is that the people out there are looking for something to put their money in, and the whole crypto space is kind of looped together. And part of that is true, and part of that is why that perception has to gradually change. But you can't get away from the fact that this coin has also become extremely political, and it's been made to be political, and it's got caught up in so many different nonsense things. So Dave is right. I agree that we've got to get through this quantum fear. And that's going to take some time and some clarity, but it's also going to be it's going to require a genuine explanation from places like Bloomberg and CNBC and Fox and all the rest of them, with genuine, Mike, that they understand how it's different and why it makes sense to be a store of value, because you're not, you're going against the major banks who have been fighting it all along, who now agree, and they're not using it just because it's just something that they can sell their investors. They're actually building around it, and that's a key development that's happened over the last 2 years, and it's taken time, and it's going to continue to take time. But it's gone mainstream. It's over. It's going mainstream, and that means something completely different. It means that it really is becoming something closer to digital gold. When it gets there, we don't know, but I have a very high degree of confidence that it will. Okay, let's pull back, way back. Okay, Bitcoin's just part of this conversation. It happens to be like a central part of our conversation often, but we got to pull way back here. This time is different. Is not that it's different. It's that the waves are getting more violent in the markets. And the reason they're getting more violent in the markets, because there's so much more leverage in the markets. Why is there so much more leverage in the markets? Because there's so much debt in the markets. We are literally running over 120 debt to GDP now. Like, that is mind blowing. And so if you step back, what's that?
130.
That's 130.
Yeah, it's 130 now. So if you step back, if you take all public in, if you step back and look at these markets and say, okay, do you believe that our economy is intertwined with the stock market? And how intertwined is it? I happen to believe it is critical to the health of our overall economy. That's what I believe. And maybe I'm overstating that, but I don't think I am. And I think that you guys would agree with me that it is critical to the economy. Yeah, but the end game is the other side of that, which is a deluge of money printing, massive liquidity dumped into the markets, because they cannot have the markets collapse like this and still sustain the debt. It's not mathematically possible. the math does not work. And so what you would see is collapses of currencies across the entire world. Yeah. You've got to go all the way, but you got to get all the way back to like I
So
hear
let's
you
start
on
with
cycles.
this. Why don't we start with this?
I hear you on mean reversion and all of that, but it's different this time. It's not that it's different this time. It's that we have grown to a spot in leverage and debt to like we're staring over a cliff. Like it's not that it's different. It's that it's different from 1970, 1980 when we had debt to GDP of 30%. Like this is an entirely different world that we have grown into. It's not like we're suddenly in a different spot. Like this is like we have taken the whole ship and gone into a completely different world. And so that's the issue that we're staring at economically. And so where I push back on is there is no way that we can continue this charade without the charade continuing. You must continue to print money and dump liquidity into the markets. And what happens to every asset when you do that? Well, they're going to save the market. They have to. If they don't, Mike, we're in a world that's going to be pretty ugly. And forget about owning stocks in Bitcoin. You better own ammo and fuel and water and have backup, for meals.
Lavish doesn't shy away from the extreme scenario. If policymakers fail to maintain stability, if liquidity dries up and markets collapse, the consequences could be severe. In such a scenario, traditional investments may lose relevance entirely. Basic necessities, food, water, energy, would become the primary concerns. While this is not his base case, he uses it to illustrate the stakes involved. The key takeaway is that the current system must continue to function because the alternative is too destructive to accept.